So, NVIDIA stock has created one of the biggest moves post earnings that has shocked the financial markets. 9 of our algos were long on the stock prior to this move. Some of them a few weeks ago, some of them just a few days ago, one of them the day before the earnings. So today what we're going to discuss is how the plethora of our algorithmic trading strategies create an anomaly kind of a situation where all these strategies were asking for an entry signal for NVIDIA stock. So all these strategies have completely different inputs, completely different entry conditions and exit conditions, but somehow or the other, all of this has come into confluence to create an entry signal. So as an algorithmic trader or a quantitative trader, these kind of signals are extremely crucial in picking up the right stock. So what we're going to do is we're going to discuss all these 9 strategies. So in that 9 strategies, 4 of them are free strategies. And the free strategies contents can be available on our YouTube channel, and 5 of them are from our course. So the course content codes are only available to the students. The other 4 is available for everybody. You just have to go to the YouTube channel and see, go check our videos, and we explain thoroughly how the code was created, and also if you want to download the code, you can do it too, so that you can input it into the TradingView PineScript codes. So the first thing that we're going to discuss is that the reason for NVIDIA move is fundamentally the earnings report came in great and it was double the consensus report. But as algorithmic traders, we're not looking at the consensus report. We're just looking at data, and we're trying to make a prediction out of that data. So the first thing that I'll discuss is one of the oldest strategies we created on our YouTube channel. That was the Stan Weinstein strategies. It was created like 2 years ago, and this one here. And if I can go and click that, yeah, we're on Stan Weinstein strategy here. So Stan Weinstein strategy called for an entry 2 weeks back on 8th of May. So at that time, NVIDIA was trading at 280, and now it's trading at 379. So if I can go to the code aspect of it, so I can just get that code area. So I'm just going to minimize this, and if I can go PineScript codes there, yeah. So Stan Weinstein strategy has got lots of input conditions. It's just not based on price. It's got volume into play. It's got the comparative simple into play, where we take SPY's data as well, and we compare all these things, and then we add it all up. So if the close is greater than the moving average, and if the relative strength is also taken into account, so we take the relative strength of the stock with respect to the SPY. So it's the relative strength higher than the relative strength of the SPY, and we also take the volume into account, and then we enter for the long position. And the exit is also kind of a strict exit condition. It's not based on a typical risk management of 3:1 or 4:1. So the entire code, I've discussed it thoroughly in the video. So if you want to go deep into that, you can go visit that video and download the codes from there. So this strategy did pretty well, and it gave an entry signal 2 weeks back, as you can see. So now let's go into another one of our free strategies. We'll just go into the recent free strategy that we did, and that was using GPT-4. So GPT-4 was one of the, I think 1 month ago we did that video. So what we did in that video was we actually compared giving ideas to ChatGPT and getting the codes from there and making minor changes to our strategy and creating an entry signal. So that also was on a weekly time frame. So I forgot to mention the Stan Weinstein strategy was on a weekly time frame, and the GPT-4 strategy, which is a momentum-based strategy, is also on weekly strategy as well. So this gave a call for entry this Monday. So just like 4 days back before the earnings, the entry was asked for, and the trade has performed spectacularly well so far, because this is some of the amazing things about quantitative trading. You have entry points in different time frames, different times. So even if you're using just a couple of them, and you're position sizing the strategies accordingly. So we've discussed 9 strategies here. So assuming you're doing 9 strategies and you put 10% capital on each of these strategies, and let's say NVIDIA stock is only there in one of those strategies, then you are getting into those big moves. So this momentum trading strategy is not only the entry this Monday, it was also had a good trade prior to that on the upmove from 30th January to 3rd April, and then from 31st October to 23rd January. So whenever it had like a really small minor losses, it got out very fast as well. So here again we ended long and got out very fast. Here there's a long and got out of the position there. So I'll just go to the code of the momentum trading GPT-4. Again, it's downloadable on our YouTube channel on that video. So just want to go down and just click on this one so the source code can be seen. So again, this one has got a stop loss and a take profit condition as compared to the Stan Weinstein strategy. This one is quite fixed. So we've got like a 4:1 risk reward ratio for the strategy, and we use the momentum based kind of an approach to make the entry, and this has worked very well as well. So again, the code is completely discussed thoroughly on that video, so you can go ahead and watch the video if you want to understand it thoroughly. So now let's go into some of the course content strategies which are available to our students, but it'll be good for you guys to people who haven't bought the course to get an idea on the performance and on the results of it. So Q1 is a daily strategy, it's not a weekly strategy, so I'm just going to change that into daily. And if I can go down, and this one called for a long entry way back on January the 20th. So it's been riding that trend substantially for a long time. So we've been running it from 169 to 379. So the beauty of the Q1 strategy is a very, very simple strategy, but the success of this strategy is to run the profits as much as we can and to position sizes across multiple stocks so that we can reduce the drawdown. So I did a Monte Carlo simulation comparison in Q1 in the GPT-4 video, where I showed the Monte Carlo simulation of the Q1 strategy by applying it to 25 stocks in position sizing and also 90 stocks in position sizing, and how we were able to reduce the drawdowns considerably. So Q1 is a very simple strategy, but the strength being position sizing. So I can't show the codes of Q1 because that's only exclusively available to the course students. We'll go into Q2 now. Q2 is again another one of the strategy which is also on the daily time frame. Q2 is a strategy where we did optimization. So we actually asked the computer to tell us which is the right variables to use for our indicator by doing rigorous test of the past 25 years and using forward testing as well. So we're using optimization on the trading data, and we're doing forward testing on the testing data to get the best results. So the Q2 strategy called for a long entry right there on 24th of February. Again, was able to get into this good move on NVIDIA. So now you might be wondering about this drawdown. So when you assess individual stocks, the drawdowns is going to be always higher. So I've given clear indication how we can reduce the drawdowns on the GPT-4 video, which is posted 2 months back. We're given a rough idea. We also did it on the turtle trading video as well, how we can reduce the drawdown. So I'm not going to go further into it, but it's a process which includes lots of steps, from position sizing to regime filters to doing Monte Carlo simulation. Everything is combined together to reduce the drawdown considerably. So we can reduce the strategy from the 64% as a portfolio to like 20% or 30% and even lesser than that, because there are strategies where we had 12% drawdowns as well. So this strategy of Q2 also ended a long position and still riding that thing. So we don't know how long it's going to ride. Well, the code has got a pretty good exit condition as well. So now let's go into Q3. So Q3 is not going to be here because Q3 is only meant for SPY index fund. It's a mean reverting strategy, so it has both long and short conditions. So that mean reverting strategy has been performing tremendously well past 2 years, and that one also we have done optimization. So Q3 and Q5 are both mean reverting strategies on the course. That's meant for SPY ETF. I generally don't like to use it for stocks outright, but you can give it a go if you want to. So now we've got Q4. So Q4 is the monthly strategy. So I'm going to change this into monthly. So it's called lazy trend follower ETF strategy, and it's called lazy for a reason, because you just have to look at the first day of the month and make the trade, and it lasts for a especially long time. So for example, this one here, it made the trade August 2019 and closed the position on May 2022, and again this called for an entry on February 2023, 1st of February, and it's still on that trade as well. So this one is ideally meant for ETF But if you guys want to try it on extremely high market cap stocks, so I'm talking about top 10 or top 5, it's going to be okay as well. So you've got to rebalance it as well. So let's say if you're doing top 10 and one day the stock is out of the top 10, then it's better off to avoid that stock completely. So if you're looking at Apple or Amazon and Microsoft and things like that, it's much more ideal. But don't go into the mid cap, small cap territory. Stick to the highly capitalized stock out there. So this one as well, again, picked a very good entry. So now let's go back to some of the free strategies again. So we did Stan Weinstein strategy, we did the GPT-4 momentum trading strategy. So let's look at the turtle strategy. So turtle strategy is on a daily time frame. Turtle strategy has got a big drawback, and one of the drawback is on the drawdowns. Again, I have talked about this in the video in the turtle strategy. So this one here on how to reduce the drawdown. In fact, 2/3 of the video is on how to reduce the drawdowns, the turtle trading strategy. So this one called for an entry on 17th of March, and it just closed right yesterday's open. So I'll tell you why. So this one code, we can go deeper into it. So I'm just going to click on the codes here. So as you can see, there is a take profit and a stop loss condition of 4:1. So we've achieved a 4:1 condition, and that's why we have exited the position. So this is what you call a positive slippage. So we might have had a 4:1 just above that, maybe somewhere in 350 or 345 or something around those nature. But because the market opened above that, the trade, the algo closes the position. So now we have actually got more than a 4:1 risk to reward kind of a situation. So sometimes the slippage affects you positively, and sometimes the slippage affects you negatively. It depends on where the gap happens. So this is a very good example of a positive slippage happening. So turtle trading strategy, again, it's a very simple strategy. You use the 20-day high, and then we also added in a kind of a filter, Regine filter, where we used this one is an optimized value. So another red flag of all these free strategies is that I haven't gone deep into the free strategies in finding the Monte Carlo simulation or optimizing much of the values. There's lots of room for improvement. So you can take these free strategies and build up on it even further. And you can also find the flaws of the strategy. So as compared to the core strategies, which I have thoroughly backtested over the past 25 years and also optimized it, and I also showed you how to optimize it, and also I performed Monte Carlo simulation on many of the strategies, and the approach has been more pinpoint as compared to the free strategy. So the turtle strategy again did wonders. Again, this video was posted 8 months ago. So if you guys had this strategy and if you did execute this strategy, then congratulations on that. So we did a video on top 5 AI stocks to invest in 2023, and NVIDIA was one of them. NVIDIA was one of them. There was another stock which was kind of, I would say it's more of a small cap stock, which created like a 50% up move. So I hope you guys got into that move as well. We also picked Microsoft and Google as some of the AI stock, and that too has moved tremendously up since our call 3 months ago. So if you haven't watched that video, have a look on that, because fundamentally when you look at it, the NVIDIA move is not only a move for the earnings, but also there is that estimate that we will need more chips for the AI and also the chip generation, and the NVIDIA has got lots of graphics, GPU units, so all those things are going to come into play, and NVIDIA is best poised for that. So we did a really good qualitative assessment of many of the AI stuff, which we think for the long term, not just 1 month or 2 months, but for the next 10 years or something, could be pretty good investment. So even if you want to do like a simple dollar cost averaging, that should work as well. So again, that is the turtle strategy. So now we will look into, we'll just finish off the course before we come up into the money flow index free strategy. So we did Q1, we did Q2, we did Q4. I'm going to do Q6 now, again meant for stocks. So this one called for a trade on on the 2nd of May, and we've been still on this trade for a while. So Q6 is also a very good strategy applied for stocks, and it's been perfectly created for stock moves. And I think that strategy is also for all stocks. It's been backtested on Russell 3000 stocks for the past 25 years. So it's a pretty robust a robust strategy as well. So now I'm going to go into our last core strategy which works. So there's Q3 and Q5 are for SPY ETF. Q1, Q2, Q4, Q6, Q7, Q8 are all for stocks. Q9 and Q10 are for crude oil and Bitcoin. So the Bitcoin strategy has performed very well. Crude oil was the only strategy on our course which was underperformed since the inception of the course 2 years ago, and it's kind of like a good lesson for me and also for the viewers and the course students that not all strategies will work, so you should never depend on one strategy. So that's one of the reasons why we gave 10 strategies and we advised, position sizing in different strategies, so you get, even if one of the strategies fail, the other strategies are performing. So for example, the mean reverting strategies of Q3 and Q5 has been outperforming the past 2 years when everybody was losing money. That strategy was performing well. Some of the stocks were going down, so the trend following strategy is kind of in a limbo. So at that time, the mean reverting strategies perfectly work well. So now I'm going to go to Q8, which is again a mean reverting strategy. So which is applied to highly market cap stocks. So if I can go to Q8, if you can go deep into it, the call for buying was given the day before, the morning of the earnings call. So the earnings call before the morning, the long position was called for, and it made that big move. So even this is a mean reverting strategy, so it's kind of like get in, get out fast. So we need to have highly liquid, high market cap stocks so that we don't have much slippage. But even then, you can see there's this positive slippage that has taken place. So any negative slippage that has taken place for the past X amount of years has probably been cancelled out with this big 30% move. So that's it with the core strategies. Now we've got the final free strategy, which is the MFI strategy, which is a money flow index strategy, which is here, the money flow index strategy. Again, to download the code, just visit that video. The coding is explained thoroughly. So again, the money flow index strategy called for an entry on 14th of April. And we've been able to write this down, and we exited the position just on the opening of that big move. So I can go into the codes of the money flow index because it's a free strategy. Just click on that one. So again, as you can see, the money flow index has got a 30% stop loss and take profit. So all these strategies, you can see some of them are on a weekly time frame, some of them are on a daily time frame. Some of them have got a strict risk reward, like the 3:1 or 4:1. Some of them have got strict exit kind of a risk reward ratios. Some of them entries are completely different. Some use volume, some use relative strength. This one uses money flow index, but all of them somehow or the other gave us a clear signal of entry in NVIDIA. It gave us confidence in NVIDIA stock is due for an entry. So this gave an entry on 14th of April, and it was a big move to the upside. So it's got like a 3:1 risk reward ratio, so it got out of that strategy. Again, I've explained this code thoroughly in the video, so you can download that strategy there as well. So I hope you guys got an idea on how, whether it be a free strategies, whether it be a core strategies, at the end of the day, algorithmic trading is created for fixed rules and to give us signals that, hey, this stock is going to perform well. And even if it doesn't perform well, there's a really clear sign that we can get out of the position because of our rule-based strategies. And when you do it in a plethora of stocks, like 10, 15, 20 stocks, and when your position size is small enough, you don't have that emotional baggage, you don't have that worry that, hey, what if this doesn't work or what if this works? But when it works, it's going to give you some great reward. So even if this move hadn't happened, this ride from here, from 263 to almost 300 itself is a big deal. You know, that itself is a big move for normal traders out there. And most of these trades, as you can see, except for the mean reverting strategy, it takes minimal amount of trades, so the cost of transactions are very less. For example, here we ended a long position 22nd February, closed a position on 22nd of March. I'm pretty sure there will be examples of lost trades as well. So for example, here we entered on a long position there, and then we had a minor loss, so we closed our position. So there'll always be situations where we have minor loss as well, because here there was a choppy period, so we ended out very aggressively, exited out very aggressively. But on the long term, these kind of algorithmic trading strategies, when you apply to it in good stocks, so picking the stocks is also good. So if you pick rubbish stocks and and you expect these stocks, these strategies to work, it will be not so ideal. That's why I stress in the course there are certain strategies where you can apply to Russell 3000 stocks, and there are certain strategies where you can apply to top market cap stocks. And depending on the strategies, our position sizing changes as well. So if you're doing an aggressive strategy which takes more risk, then it's better off you do it on highly market cap stocks. And you could do it in low market cap stocks, you could do it in small cap stocks, but then your position size should be so small that the losses, even if it's big on one stock, it's irrelevant on the entire portfolio. So I hope you guys got a gist on how these algos worked very well for the NVIDIA move. So if you guys have any doubts or clarifications, feel free to leave a comment or send me an email, and I will be more than happy to help you. If you guys want to check out our course, it's on our website here, and it's got 10 strategies, and the course prices are here. So the Prometheus is a strategy which just consists of all the 10 strategies that we discussed right now. So hope you guys enjoy this video. Have a great day. Bye bye.